The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the, November 16th. Fantastic Friday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Dial on in, 877-927-6648. If you can't dial in, let those fingers do the walking. You can always send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. And in the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on Fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we've got the Dow trading up 91 points, 25,380. S&P is up 2. NASDAQ 100 down 42, trading at 68.48. Russell's off 4. Semis down 19. So gold is up $8. Light sweet crude. Well, light sweet crude's up 11 cents. What I was really going to say was the spot volatility index. That's going to be one of the keys that you're going to be watching for today. We've seen these markets gyrate up and down. So one of the things that you and I will do is take a look at some end-of-day numbers to assist you with regard to what the markets are communicating to both you and I. Leading the charge to the upside, it's AutoZone up $17. America's Car Mart up 12. EMC Group up 7. Cooper Companies up about 7 to the downside. NVIDIA, you're well aware of that. You don't need me to tell you that it's down 19% with 35 million shares, but I can't. I just did. Booking Holdings off $28. Amazon down 29. Up. Each of those are a little over 1% to the downside. So certainly things to look at. We want to look at what you want to look at. The first question coming from Bob Y. Bob says, hi, Steve. Hi, Bob. I enjoy your show. I enjoy that you enjoy the show. Your take on natural gas, please. Looks like you're playing the UGAS, the 3-time long, or the short, or just stay out. So let me do this, Bob. Instead of taking a look at those ETF structures, let's just go take a look at natural gas here and just try and get our read there. And then from there, you can make a decision. And we'll do this 2 different ways. Yesterday, we were looking at natural gas. And what we had noticed was price had pulled back to Stevie's green line. Now, when that line is green, it's either green or red. When it's red, tells us the price oscillator is below 0. When it's green, tells us the price oscillator is above 0. Is that important? Yes, it is. Otherwise, I wouldn't have done it like that, because there's nothing more bullish than a rising price oscillator above 0. I know you might ask, what the heck is a price oscillator? Excellent question. That's the difference between 2 exponential moving averages. In our case, we use 19 and 39 out here. When price is pulling back, what you don't know, is it just a natural retracement, or is there something else going on? Well, when price pulls back to a green Stevie line out here, it's just a natural retracement. As violent as it truly was yesterday, that's what it was just a natural retracement. As long as price stays above 3.948 out here at the moment, that's the reading on Stevie's green line, then what we have to say from a daily perspective is that this is bullish. Now, you'll see a little dotted line out there. That actually is the weekly Stevie green or red line, and price is well above that. So this is bullish across the board. Unless I kind of screwed those two lines up. I don't think I did. Nah, I know I didn't do that. And so bullish across the board. However, just because it's bullish, that also means you and I have got to go try to find resistance out here. Certainly the highs of a couple of days ago, because yesterday was a nice bear sash candle. So it's going to be the high of the prior session out here. But that's a bit too high. Let's go take a look and see if we've got some other market profile data. And your question was long, short, or neutral. I'm going to tell you at 1:11 in the afternoon on a Friday, the answer is neutral. But let's go take a look at what the profile information might be providing to you and I. And here we're looking at 60, a 240, then a daily and a weekly out here. Now, what's interesting about the daily profile is that a brand new box just formed. Now, you won't really see a box, or you never really saw a box. You saw 3 lines. Well, today, you only see 2 lines. You see the bottom, which is 3.657, which matches the center of the box, 3.657. And then you've got the top of the box, 380. So these are below Stevie's red line. If price was to close, which is green, if price was to close below that 3.95 level, then you're looking at price to pull back to 380 or 3.657. If you're looking at it from the long side, I'd rather you be buying it, quite frankly, right around there. You've got 2 real wide-ranging bars from yesterday. That's a reason just simply to stay put. Not cut put, but stay put out here. Our 4-hour chart, 240-minute, would say in order to get bullish, you would need to see a close above 4.462. If you were going to try to trade this to the short side, that's where you would try to trade it to the short side from. But you've got to do the math. You know where support is. You've got Stevie's green line out here, 395. So you would have to make that decision as to whether or not the money management aspect of this would be worth it. So I know you wanted to know long, short, or neutral. My suggestion to you is neutral. Come back to this on Monday, Tuesday. Let's, in fact, see if there's some more data that you can trade off us. So thanks for writing in. Much appreciated. No other questions. Oh, I do see there's a question here. This is from Ruby. Ruby wants to take a look at oil. Has oil finally bottomed? And great question out here. Let me take a look at, I've got about a minute before the breakout here. Let's see if I can find the December contract for oil, which I can. And let's also take a look at, so here's my take right now, Ruby. The answer is no. Now, that's just from this one chart. So we're going to go take a look at other charts as well out here. When we take a look at Stevie's Ninja Trader chart out here, you and I don't have any signs of a bottom. We take a look at the December contract. First of all, price is below Stevie's red line. That doesn't mean there can't be a counter trend rally. Your question was, is this a bottom? Stevie says no, not a bottom just yet. Price would need to at least close over Stevie's red line. That's priced at 58 and change. It's 58.68 on my screen at the moment. So all we're seeing right now is really not much. We want to go take a look and see what the TAS profiles look like. So when we look at the December contract for light sweet crude, we'll specifically look at the daily time frame. And what you're going to see is prices just the opposite of natural gas. Prices trading below the bottom of a brand new profile that formed today at 58.18. That's resistance, Ruby, until price closes above it. Then there could be a counter trend rally up to 60.75 or 63.32. But Stevie does not see a bottom in light sweet crude just yet. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And really, Ruby, what we're seeing here is, in essence, the exact same thing that we looked at for light sweet crude. Today forms a brand new profile. So the bottom of its box is normally support. In this case here, price is trading below that. That's at 158.74. We can see that it was tested, so far rejected. So if you're looking to trade this from the long side, you really want to see price close above the bottom of the box. You can see that this is a bearish structured box out here. We know that because the center line at 164 is closer to 168, the top of the box. So if price is to close above 1.5874, then you should have a bounce up to one of those two levels. We don't know if it would be the point of control, where you have both buyers and sellers believe that there would be fair value on a daily basis out there, or whether or not price could get up to the 168 area. This couldn't turn bullish, or wouldn't turn bullish, at least from a signal standpoint, unless price closed over the top of that profile, because nothing would be more bullish than a failed bearish pattern. In this case here, the bearish pattern would be the bearish structured box out there. So as we speak at 119 in the afternoon, price's tested resistance is trading below it, and so therefore you do not have, I don't know if you're looking for a bullish signal. I think that you are or were. We don't have it when we take a look at the TAS market profile. So I hope that helps you out with regard to both light sweet crude and gasoline futures out there. No other questions that are in place. So let's go back to what I said during the opening is, what is it that you're going to look for to try to gauge what the market is communicating to you? Now, specifically right now, I'm going to talk about the S&P 500. The reason I'm going to do that is because what you and I are looking at is we are looking at the spot volatility index. And when we take a look at the spot volatility index, I think the most important, the most interesting man yesterday was the shooting star. It wasn't really a man, it was a candle. But as we take a look at it, a shooting star is the exact opposite of a hammer. What do you mean jelly bean? I mean, price was rising. Well, we know that was the case. So there was a trend that was in place. It was moving to the upside in the spot volatility index. And then what we have is a small-bodied candle with a wick that was at least twice the size of that small body, This case here was probably 4 or 5 times the size, and that small body is at the bottom of that candle session. It can have a little bit of a wick. In the case of yesterday's spot volatility index candle, it did not. Now, the cool thing about the shooting star candle versus the hammer, they're really traded differently. Now, what that also means is that it set up a level of resistance. The high from yesterday is resistance in the spot volatility index. But how you trade these things, as an example, let's take a look at the last 3 shooting stars. The prior one was on October 30th. And my interpretation of a shooting star, just based on thousands of hours in trading these, is that if they're going to work, they work right away. Now, what that means is that you will see price continue to move lower. And if it does that, then that's a real indication that that shooting star is communicating something to you, and you have to identify if something's moving lower, where is support. Well, in the case of the shooting star from October 30th, it moved lower the following session, and the price target would have been the 50-day exponential moving average. That would be price target number 1. Well, it got down there. It did that on November 7th. If you take a look at the shooting star out here from October the 12th, it really moved sideways, didn't move higher on the very next session, October the 15th. And price just moved lower, did not get down to that 50-day exponential moving average. Take a look at the shooting star from the day of October the 8th. The very next trading session moved slightly higher. So it didn't have follow through to the downside, and therefore it failed to act as a shooting star. Now, look, you can't just trade based on candlesticks. If you could, boy, wouldn't life be easy? It just doesn't work that way. You've got to learn how to be able to combine these with patterns, be able to identify other levels of support or resistance out here. But what is it that we know at 1:22 in the afternoon? Thus far, this is going to be an end-of-day decision, but thus far, at 1:23, there's follow-through to the downside. So what is it that you should anticipate? If you see a close lower today, doesn't have to be lower than today, just simply lower than yesterday's. Of course, the further lower it gets, horrible grammar, but you sort of know what I mean out there, that would then suggest that the spot volatility index will head to 1804. It could bust through there, but at least that becomes the next target. Now, for 1927 and 1804, and prices moving down, what do you think is going to happen with the S&P 500 or the ES Mini? Exactly. The spot volatility index is headed lower, then the ES Mini, the S&P, is headed higher. It is really just that simple. So this is probably the one thing that you have to pay attention to today inside of the markets to gauge, at least with regard to the S&P 500, where it wants to go. If we want to take a look at what's going on inside the S&P 500, we'll do it by taking a look at the ES Mini. We'll take a look at several different time frames. When I say several, I'm just referring to 4. I'm referring to the daily. I'm referring to the 5-hour time frame. I'm referring to the 120-minute, 2-hour, and then the 30-minute time frame. If you just simply start in the bottom right, you're going to see the 30-minute time frame for the ES Mini. And as we take a look at it, you're going to see a trend line. And look at where price stopped. By the way, the body of the candle is truly the essence of price. If you take a look at that last half hour coming into 1 o'clock, and you looked at where that body stopped, it was right then and there, right into resistance. You can see that it's really trading between a descending trend line and a rising trend line. But look, let's come back to this. Let's first go out to Toronto and speak with Mike. Mike, thanks for calling. Thanks for holding. How are you?
Yeah, hi. Thanks for taking my call.
Sure.
I'm looking to enter New Gold, NGD on the Amex.
All right. And have you targeted a spot to enter New Gold so far?
Yeah, I follow the moving averages. I was looking for a bow tie support where the 20 intersects the 50. And I was just wondering whether or not my theory, while entering in here on a pullback on light volume, I wanted to share my ideas with your ideas. What do you think an entry spot would be?
Sure. So I would give you a couple to take a look at. The ideal entry point, and I don't know that price will get back there, would be 81 cents. Now, I come up with 81 cents the following 2 different ways out here. First, what I'm looking at is the daily time frame. The reason why I say price may not get back there is because what price did yesterday inside of New Gold, NGD, was closed above resistance. Resistance was the top of its profile. That's what we're looking at here on the screen. We haven't seen it close above resistance since the day of September the 17th. We haven't seen a test of that. But that's what the daily time frame says. If price was able to close below 87 cents, the bottom of that box is 81. Michael, that's the reason I come up with 81 cents. That's using that chart. If I bring over my other daily chart, I would say a pullback to Stevie's red line. That right now is priced at 81 cents. So right around that 81 cent area is where I would say would be a nice entry point for New Gold. We're going to a hard break. I'll look at the weekly time frame chart, and then let me know what other question you have, where your entry point was, because we can take a look at that too. This is Steve Rhodes from TFNN with Michael in Toronto. We're taking a look at New Gold Inc. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So, Michael, during the break, I just, I looked around a couple different tools and so forth, and I don't come up with anything different than either 87 cents or 81 cents as the level for entry. What is it that your tools are giving you as a target?
I saw the initial sign of strength last month after it bottomed, and I noticed I was riding the 20-day moving average on the daily, and it kept testing the 50-day. It was like a ping-pong match between the 20 and the 50. And then yesterday, it finally broke out above the 50, okay? And today, it's up again.
And where's the 50-day? Where's the 50-day moving average?
So the issue is normally if you keep testing, if the 50-day moving average was the previous resistance, it now becomes the new support. But over time, though, the 20-day and the 50-day will converge and act as a bow tie support. So what I'm anticipating is a light pullback where they go and retest the 50 and the 20. By then, there should be some kind of a support level where they intersect, right? And then the next next rally, you'd have basically a bullish cross. So that would be like an algorithmic buy signal. That would be triggered. You see, so this is my play.
Got it. Okay.
My playbook on this stock.
Well, so you're not there yet, is what you're saying?
No, I'm not chasing the gap up from yesterday. I'm hoping that it comes back, test the 50, because that was the previous resistance. So the previous resistance becomes the new support.
So, but you're saying the 50-day you show as a resistance, is that the exponential or is it a simple moving average?
Sorry.
Simple. Okay. All right. So let me just change that here. Got it. Okay. So right now, 84 cents would be the simple moving average from a 50-day standpoint.
Right, but remember it's dynamic, right? So I mean, it's going to change.
No, of course. No, absolutely. All right. Well, hey, I like that terminology, bow tie. Do you wear bow ties?
Huh?
Do you wear bow ties?
I used to when I was a kid.
Okay, all right. Well, I like that, the bow tie. I like that bow tie.
Support or the necktie support, your choice.
I like it. All right. Thanks so much for calling. I appreciate it. All right. That was Michael in Toronto. So let's take a step back, and we were taking a look at the ES Mini, I believe. So let's just go back there real quickly. And what we were noticing was just simply a 30-minute chart out here, and you can see that it's trading within a descending price channel. That's the bottom right-hand panel chart out here, and a rising price channel on a short-term basis. If we just go one step above, you're going to be at the 5-hour time frame chart. On a 5-hour time frame chart, you also see, in essence, that similar trend line that we were looking at on the 30-minute, just drawn here on the 5-hour. But what you can also see is 27.48 1/4. That's the top of the 5-hour box. If price were to close above that, and I'm not saying it is, I don't know that it will, but that would be the number you would be looking at to the upside. If it closes below that, then you're likely going to see a run to 28.18. So you're keeping an eye on the spot volatility index. You're keeping an eye on the ES Mini to see if it can bust out above resistance. Now, by the way, 27.48 is the top of that 5-hour profile. That is not the trend line. So the trend line, you'd see a break. We're really trading, in essence, just below it or right about on it as we speak right now. So that's what the ES Mini is doing. You can see the 120-minute time frame chart lower left, and really we don't have anything to necessarily gauge up here on the daily time frame, other than that this week here on a daily basis, price pulled back, tested a level of support that was 26.95 and held. That's what's going on there. If we take a look at the Dow, which is trading up about 70 points right now, but you and I we're going to look at the Dow equity futures contract. What we can see here on a 30-minute basis is, in essence, a horizontal level area of resistance. And that's where price got up at the 1 o'clock time frame. Got up there, found resistance. That's priced at about 25,478, give or take out there. And if price can clear that level, then what you're looking for would be 25,489. That's the top of the 5-hour profile. That's one step above. So you know that 25,489 level is a key area to be watching as you come into today's close. That's the upside. To the downside, it's going to be the trend line, or it's going to be the bottom of the box at 24,978. That's what it looks like there. So those would be the levels that I would be watching in the marketplace today. If we take a step back and we look at the New York Stock Exchange and we get a feel for what it's doing, right now it's advanced decline oscillator reading. That happens to be the center panel on my screen out here, still above zero. It's above zero, but it has just turned down here over the course of the last 30 minutes out here. But as long as it stays above zero, by the way, what it means by being above zero is the buyers are the ones with the edge in the marketplace out here. If it closes below zero, then it wanes a bit. It's kind of like a football game. Maybe it was a fumble. Maybe it was an interception, but you need to see what takes place on that next play, meaning on Monday out here. But staying above that, and that is the difference between the 19 and 39-day exponential. Michael and I were talking about a simple moving average, but exponential moving average of the advanced decline data out here. So that's probably more difficult for you out there to focus on and pay attention to. Not everybody really has this data live. So easier to go take a look at the numbers for whatever the index it might be that you were tracking by looking at the equity futures contracts and those levels of resistance that you and I were looking at. But just simply as a health check for the New York Stock Exchange, as we speak right now, things are still bullish. If we go take a look at Goldilocks, gold was trading to the upside, and gold is trading right into the center of its new daily profile. This one formed a couple of days ago. That's 1225.90. The high today has been 1226. Pretty darn close to 1225.90. Now, look, this still is in a bullish mode out here, no doubt about it, and price is likely to get up to that 1233 to 1238 level. However, in order for that to occur, you need to see price of gold in euros continue to climb out here, as well as the price of gold in yen. It is in pounds, but it's not in the other two currencies. So there's a bit of the yin and the yang, whatever that means out here. There's some buyers and there's some sellers, and you want to see everybody on the same page out here. If we take a look at T-bond futures, what we can see is they're moving higher in dollars. They're moving higher or slightly higher in pounds. And in yen, it's a sideways action to slightly lower. And in euros, sideways action entirely from yesterday. Nonetheless, it does look like T-bonds, treasury bonds, and there's a lot of folks out there that like to play these to the long and short side out here. I would say 140 and 9/32 is the target price of where price should head to. Not that it can't head higher, but that's going to be the top of its weekly market profile. So that's your wrap-up at 1:38 in the afternoon of T-bonds, of Goldilocks, what the equity futures contracts were doing, and Michael in Toronto's bow tie. It was the two moving averages, 50 and maybe the 20, I think it was. 21, I might have that wrong out there, but I like the bow tie, even bow tie pasta. Hope you like it too. It's Steve Rhodes with TFNN. Give me a call, 877-927-6648, or send me an email, steve@tfnn.com. Just put radio show question in that subject heading. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow is up about 35, S&P off 4, NASDAQ 100 back 54 points. We've got a request from inside the Tigers Den to go take a look at silver, speculating that it is in rally mode. And indeed it may be, and if it is, it's got to clear its next hurdle. Its next hurdle is the daily profile. Looks like this formed today as well. I can't tell if it's today or yesterday. Either way, it's a relatively new profile. Looks like yesterday was the day. And that's at the 114. That's at 14.409. It's trading right now at 1437. The actual high today has been 1440, so that qualifies as a test of resistance. So if it is in rally mode, what you should see is price close above that. Now, it doesn't have to close above it today. It needs to at least close above it in order to confirm that this is in rally mode. It has the start of a nice little V-shaped bottom out here, but price is trading right into what is resistance out there, the bottom of that profile. Similar to the way that we took a look at light sweet crude and gasoline futures out here. So we've got some similar type patterns. Natural gas was just the opposite with regard to where its profile had formed, which was below price. If we look at the weekly time frame chart, what we'll see is that the current bar is orange. Oftentimes, but not always, oftentimes when that bar is orange, it tells us that there is a new profile that is trying to form. So it's very possible on Sunday, when silver begins trading again, that we will see a brand new profile. No guarantee, but we may see a profile. So let's remind ourselves to go take a look at that. But again, if silver has bottomed, what it needs to then next do is get above resistance. That's at the price point of 14.409 on the December contract out there. So a quiet day here in the phone line markets and the email markets, although I'm just checking. Yeah, still very quiet out there. Must everybody be out getting ready for Thanksgiving? Can you believe it? It's like it's here, right? It's here as we come into next week. So trading is going to start getting lighter out in the markets out here. And then it's one of the reasons why, seasonally speaking, the markets begin to drift higher into the end of the year. The question is, will they do it again? Will the markets do it again this year? That is the question, isn't it? Now, do you have the answer to that question and the reasons why? Maybe you do. I do. Would you like to see them? Okay, I'll take that as a yes out there. I'll take that bit of silence as a yes. It does appear that the Dow has formed a bottom. Now, I'm speaking just about the Dow out here. Well, really, we'd be talking about all the markets. And I know somebody can say, how can you say that, Steve-O? The reason that I can say that is because of that Rhodes Momentum Indicator tool that identifies tops and bottoms in the marketplace. This happens to be a daily time frame chart for the Dow. Now, it's just a bar chart out here so that I can squeeze together more data on the screen. And all that you need to pay attention to are the black arrows out here. Those black arrows show you Rhodes Momentum Indicator bottom signals. Well, we've got one for the Dow. That came in place, that formed out here on October 30th. That one formed above the prior one from back in the February time frame. You know, there's the whole idea of making higher lows out here. Well, in this case, with regard to, it's the same thing with regard to Stevie's pattern. Now, the reason why it's such a significant pattern out here is because we can go back, and especially when we are in a market that is trending to the upside, and take a look at the prior ones that formed, such as back in August of 2013. Was a nice bottom, such as the one in May or June of 2012, nice bottom, such as the one back here in September of 2011, such as the pattern that formed out here in July of 2010, and of course in March of 2009. So it just happens to have finished on schedule, getting ready for Santa to appear at the Thanksgiving Day parade. That's this coming Thanksgiving, and it looks like the bottom is in, and it will be in unless price gets taken out. Those October lows get taken out. So yeah, it does look like the bottom is in for the time being. Now, with regard to the Dow itself, if we take a look at the equity futures contract out here, that's going to be panel number 3, but instead Stevie's just going to expand it out. And what you're going to notice, just like we looked at for silver, because the question was, has silver bottomed? And the speculation was yes. And what we noticed was silver was moving up into a profile. In its case, it was the bottom of the box. Well, if we take a look at the Dow Equity Futures contract out here, what we're going to notice is the top of its box is 25,545. The high today is what is the high today? 25,505. So about 40 points away. We're trading well below that, 25,112. That's the level to watch. I'm not saying price has to close above that today or Monday. But if it does, it's just going to be another indication of the pattern that we just took a look at. So there is your Dow Stevie theory out there. We've got a question if we could go take a look at, looks like February hogs out here. So let's see if we can go pop those up on our screen out here. Let's go find those. Let's go find those hogs, those lean hogs out here. Here we go. Hold on. We've got to. Where is it on Stevie's screen? I don't think lean LE February 19th. I don't think that's going to be the lean hogs symbol on my system out here. But we will try to do that. Maybe what I'll do is do that during the break so that I don't stumble too much. That's live cattle. Yeah, let me do that for you. Yeah, I know. I don't see it. Where is it on my screen? Is it right in front of me? Here we go. Okay. All right. I've got December out here. Thank you. Thank you. It's nothing like having a wingman or woman to help keep you straight. So let's come take a look at the contract, the G contract for February 2019. I got you. And as we take a look at this, we're looking for market profile data out here. Well, here what we've got is a little bit of resistance up at 67.20. That's the weekly profile out here. So here's your weekly profile level. You can see that that bar 2 this week is orange. So it looks like what's trying to occur out here is a brand new box. So we won't know really until Sunday, Monday of this week. But if we come take a look at the daily, the 60, the 240 minute, we've got nice little green shoots. All those bars are green out here. And this would say that, you know, your resistance is the prior highs out here. Is this going to make a triple-ish type top, so to speak, in the 68-ish area? I don't know the answer to that. But you do have the old W symbol out there. We can't say for victory, but it's two V's put together for victory. So with regard to the February 2019 contract out here, everything looks bullish. Of course, it's going to have to break above the highs from the trading session of October 1st, 2018 in order to mosey on. In which case, then, what you would have is you would have a consolidating pattern or a breakout of a consolidating pattern. And you know that gives you the measured move, right? If you break above that, it's equal to or greater than the consolidation. The breakout to the upside gets you to the 77 bubble. Steve Rhodes with TFNN. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So we're going to finish out the show by looking at the instrument SWKS. Long-term view is what Hector, the fuel injector from Murrieta, California, wants to take a look at. So long-term view. Let's take a look at the short-term view first, if we can, Hector. The reason that we want to is because I don't know if you're looking for a bottom. I suppose I really don't know what you're looking for. You're looking for the long-term view. Hello, I got it. All right. Let's first take a look at the short-term view. Let's take a look at the daily time frame. Let's take a look at what took place yesterday. Two things. Number one, we can see that prices moving lower, doing less relative energy. And yesterday, you had that little bullish engulfing candle. That is a sign of a bottom. What else happened yesterday? Well, you can't really see it that well, but yesterday was a Tom DeMark setup 9 count. Now on my system out here, I'm only tracking the 9 counts to the upside or to the downside. And the cool thing about this system here, which Tom DeMark developed, I believe back in the 80s while he was working for and with Paul Tudor Jones out there, and what he identified was this 9 count, which by the way is taking a look at closes from 4 bars earlier to begin the count either to the upside or to the downside, 1 through 9. He noticed that after the 9th count, or as you got to the 9th count, that there was either a trend change, a hiccup, or a consolidation out there, and that those occurred either on the bar prior, meaning bar 8, or the actual bar of 9, or the following trading session. Well, let's go test his little theory out. Not take a look at yesterday's, but let's go take a look at a few others out here. Take a look, Hector. We're not going to get to the intermediate term time frame, I'm sorry. But if you take a look at that TD setup 9 count on September 12th, yeah, that looks like a change in trend. If you take a look at the one that formed out here on August the 20th, the actual low was the day before. If you take a look at just a little bit of a hiccup to sideways consolidation from August 1st out here, hey, so here's what I can tell you at this stage. Price ought to move up to 75.52 at the most. And on Monday, let's take a look at this again when Stevie has better use of the clock. Hey, folks, thanks so much for being here. Have a great weekend. Be safe. And I look forward to seeing you on magnificent, magical, marvelous Monday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.